Hello everyone, a very good morning, good afternoon and good evening to all of the viewers from around the world. This is your host Vaibhav. In today's session of JForex Indicators Explained, we will be looking at the concept, the uses, the properties and also the customization tools available on this platform of the indicator known as standard deviation. And as the name suggests, this indicator tries to measure the price deviation from the mean expected price. So we look at the recent price series, whatever is your calculation period, you take that into account and you see what is the mean price over that period, and then you compare that mean price with what is the current applied price, and you see how far it has deviated from the mean price, and using that then you can use the regression analysis to look for the opportunities to trade, whether the deviation is warranting some immediate attention or not. You can decide using this indicator and you can strategize with the help of this indicator after considering all other factors and of course the trend of the instrument of your choice. So let us now head to the JForex 4, the newly released trading platform from the Dukascopy Bank SA. This is the USD JPY chart which I have drawn with the candle period defined at hourly. On the lower side, this plotting you see is for the standard deviation indicator with the calculation period of 5, and the standard deviation has been defined at 1.01 standard deviation, and this is simply for comparative purpose. So this output, this plotting will be done in such a way that it gives you the idea how far it is in between the 0 to 1 standard deviation line, whether there is too much of deviation or not. You can compare that using this plotting of the output value, and you can always change the scales, change the parameters, and we will see once we get to the customization options. Now let's talk a little bit more about these indicators properties. This indicator gives you a good idea of the price volatility in terms of its recent price move, and also how far it has deviated from its mean price. So if suppose there has not been much of a volatility like in this instance, where for long period of time we had this subdued volatility, and as a result of that we saw that if we look at the output of the standard deviation over the time horizon, then it was at 0.13, 0.14. So in nutshell, the volatility was pretty less, and once we saw this move on the higher side, the volatility jumped in. Now this is a trend neutral indicator. It is not really going to give you the idea of trend, whether it is bearish or bullish. You will have to use other parameters, use other data points like price action data, the close and the open price difference, or any other indicator to look for the factors which might help you in defining of the trend. So that is not, and then applying the factors to determine trend, you can figure out if this is the opportune time, this is the right time to get involved in the trade or not. So now coming back to the volatility measure, here the standard deviation was quite less at 0.14, and that remained the case as long as we had this subdued momentum. And even if we go back in time here, you can notice that whenever we have these periods of subdued volatility, the standard deviation was pretty less in those instances, and only after the volatility picked up, we saw this standard deviation output climbing up. Now, even if we get the price action diving on the lower side, the standard deviation shoots up. So that is happening simply because, as I said, this indicator is trend neutral. It is not going to give you any idea of the trend. For that you will have to take help of the other factors, But here it gives you the idea that standard deviation measure is providing you with this relative measure of the volatility, and if we compare this output value to the prior values, you get a sense that this is something which is quite abnormal, or you can say it is not something which happens as a routine. Might have better chances of being on the right side as well as on the right time, because it is very important to be at the right time at the right place, and also the timing should be right. So for that, once you get both these factors in place, the deviation as well as the trend, then in coming hours you can decide to get involved and look for the opportunities as and when the momentum will pick up again. So using this factor, you can decide whether this is the right time to get involved, or whether it should be the time to simply sit on the sidelines and allow for things to stabilize, and maybe after that, in the next leg of the action, you can get involved. So for that, you will have to keep this reference range in mind, and using that, then you will be in better position to work with this indicator to start exploiting the opportunities as and when those arise in the market, as this is the market, live action market. And here the opportunities are going to keep arising from time to time. All we have to do is be ready for those opportunities to arise and then grab them by both hands. And of course, by grab them by both hands, I mean we have the setup ready, and after we see the opportunity is fulfilling all our decided parameters, preset parameters, we can of course decide to jump in the trade and try to make money, as we will have higher probability of being on the right side of the price action, and that will increase our probability of making money rather than losing money. So these indicators can be incorporated in your trading system regardless whether you are a intraday trader, you are a positional trader, or a swing trader. So whatever is your strategy, you can always consider how far the recent price, the current price has deviated from the mean price, and using that data, you can always apply the regression techniques, or even your original technique can be suitably modified to consider the impact of the deviation. And if we have a system in place, this indicator is simply going to enhance the optimization for the entry as well as for the exit. So let us now see its customization options and how we can customize the indicator for figuring out the opportunities. Now, the applied price is usually the closing price. Here we have these different sets of applied prices. Depending on the applied price, you will have the difference, noticeable difference in the plotting of this indicator. So let's try it one by one. There is slight shift as I applied open price. Now if I use high price, again the plot has shifted. Low price, there is difference. Median price, typical price, bit close price. So all these customization is possible with this indicator. Now I will revert back to the close price. So you should try out all these options and see what is the best fit of the applied price for your requirement, and using that, then you can try to figure out the opportunities. Now coming to the time period, how what is the calculation period you want to base, and this is going to be the mean price to which the current price. It gives you the idea of the mean price over the calculation horizon, and then you can compare it with the recent price. So here if we look at the mean price over these 14 candle period data, and then we compare it to the recent price, we will have this plotting which is going to be a lot more stable. And only when there is substantial move after period of rather calm market moves, we will have these kind of sharp jumps, and also it is going to take a lot more time for the mean price to revert back to what it was earlier, as this single candle period is going to impact rest of the candle periods under the calculation. So whenever we use a larger calculation period, then those calculation period will be casting its impact for that calculation period. And if we have very sharp move, then this sudden jump will happen, but for stabilization to kick in again, it will take some time. Okay, so this is how we get the plotting of the indicator when we have increased its calculation period. Again, going back to the editing, close price, open price, high price. Here also, for all these applied prices, we will have significantly different plotting. Alright, you can further increase it if you feel like. Now I will restore it back to the default. Then comes the standard deviation scale. How much you want the scale to be. Okay, so you will get this. This is simply the scale of the deviation and how far the deviation has happened on the scale is what we get as the output. So it doesn't really impact much. I will restore it back to 1. Okay, coming to the output, if you are happy with this color combination and the simple straight line, then there is no need to change it. But if you don't really like this color, or if you want a bit different color, you can go for that as well. You can even go for different color combination for defining the trend up and down. And also styling combination can be changed. It can be defined in all these color combinations, or you can go for this kind of bar charting as well. So this is always a possibility. The prominence of this plotting can also be reduced. So here now the indicator is looking a lot different than what it was when we were having that default designing factor in place. The output, the levels. Since there is a unbounded indicator, we can't really define a level which is going to work. 0 is already a factor in place, so we exclude this part. Now if you want the stability and if you want the output of the current candle to remain constant throughout the calculation period, you can opt in for first option, or else you can always define it differently. Highlight the time period zone, whatever is your time period under calculation, you can highlight it. Calculation can be further customized. So if you want to customize the instrument, you can go for that. This indicator is going to work well with almost all the instruments available on the platform. So you have the liberty to use this indicator on any instrument of choice as long as it is available on the platform. The candle period can be same as the chart. So now the current candle period is of hourly time frame, and we have the plotting of the indicator now changed to 30 minutes, simply because I have defined the candle period of this indicator as per the new customization at 30 minutes. So regardless of what's the chart's candle period, we will have the plotting of the indicator done using 30 minutes as the base of the calculations candle, and it will be applied on all the charting period. And if I only revert back to use from the chart, only in that scenario, we will have the indicator calculated as per the current chart candle period. Okay, it is taking some time to load. Let's try out 15 minutes. Here you can notice this is the plotting of the indicator as per 30-minute candle. All right. Editing. I will restore it back to use from the chart. The side, it can be ask or bid. There is going to be always slight difference depending on which side you are on. The indicator is going to be available on all the candle periods of the chart when I opt in for this option. But if you want this indicator to be available only on certain time frames and not other, you can define it that way also here. Now the plotting is going to be as per 5 minutes and hourly. But if I change it to say 4 hourly, daily, or any other candle period apart from hourly and 5 minute, there won't be any plotting of the indicator. So this is how this indicator system is going to work. 5 minute, it is back into the mixture. Okay, 15 minute, it's not there. Again hourly, it is back. So that's how this system of the indicator customization can be utilized to define this indicator in whichever way you deem fit, whichever way you feel that it is going to optimize your entry exit points and help you in further making your trading system profitable. And that's the whole point of this presentation, to make you aware of these options given on the platform in which you can customize and use this indicator to make more money out of the market. So that's all from my side for today's session. If any of you have any query or any idea to share, you can write back to me in the feedback section and I would be more than happy to take the discussion forward. Thank you all for joining in. I will be back tomorrow with a new indicator, new formation, new combination. Everything will be new, so do come back.